This is a story about jisen. That's a Japanese term meaning putting theory into practice. Japan is changing the way it does business so it can have the money it needs to invest in productivity. What does that mean for Japanese corporations, the way they are structured and the way they finance those investments?
There is a real corporate revolution going on. The notion of every company needing a plan to get above 1x book and essentially using shame as a tool for reform has been very, very effective.
The management has the best position to formulate a plan how to improve the current situation. Company itself has to drive how to transform the company.
The combination of a reflating economy and market reforms in Japan are reverberating through corporate boardrooms and C-suites, causing CEOs to rethink everything from how they finance their businesses to what businesses they want to have in their portfolio. Are we seeing yet the effects of the reforms? Are CEOs acting differently, more actively?
Well, I do think we're seeing changes. I think that we begin to see more diverse boards and we begin to see perhaps the taking more of opportunities.
Mireille Solis is a Japan expert at the Brookings Institution.
I believe that this could be a good moment, I think, to think about a new wave of investments. I think one of the challenges, source of frustration, is that corporate Japan has been very risk averse. This might be a way in which we begin to see an appetite for taking on more investment.
Japanese companies' willingness to rethink how they do business may extend even to whether they want to be listed on the Tokyo Stock Exchange.
The number of delisting used to be only a 50 company delisted. Now, last year was 125 company delisted. And now this year, 2026, already 16 announced to delist. So I think, number of companies are scrutinizing whether the keep listing is the best way for them to pursue growth.
As the head of the company overseeing both the Tokyo and Osaka stock exchanges, Hiromi Yamaji leaves it up to individual companies to decide their best path for growth. But since taking over, he has also implemented reforms that require disclosure and explanation of firm strategies to become more profitable.
Used to be, Japanese companies didn't spin off any operations. Last year, only 6 months last year, we had 280 carve-outs, spin-offs. So, that means that they are quite serious the seller side is quite serious to reorganize their business portfolio, but at the same time, they are realistic enough that they recognize that they are not a good owner. I think that's a good sign.
One of those carve-outs came in 2024 when Panasonic Holdings sold a majority interest in Panasonic Automotive systems to Apollo Global Management. Shares of Panasonic Holdings have been on a tear ever since, up more than 70% since the deal was completed.
It's amazing. It's amazing.
Masashi Nagayasu is CEO of Panasonic Automotive, now focused on the transition from automobiles as driving experience to a mobility experience, something he calls joy in motion.
The value of the car is shifting from driving performance into the mobility experience which people are having in the car space. But individual person having a different sense of comfort, like temperature as well. So we use our technologies and also AI-enhanced technologies to fit to personalization and make individual person make it more comfortable in the car.
Nagayasu says carve-outs like Panasonic Automotive's can bring with them a new focus on a more specific business.
Panasonic is a conglomerate company, and they have diversified business models. And they have decided that automotive sector is not the focus. So on the other hand, partnering with Apollo, we can really 100% commit to automotive sector's field. So this is rather, positive for us to really stick to that, strategy.
The purpose of the spin-off is that probably that particular, the owner of the spin-off operation believes that they are not the best choice from the viewpoint of the business itself. In other words, there might be better partner for them, and so that they believe there may be a PE funds which owns other operations related to this particular business. I think those are many different kind of ways thinking, but I think it's important from the viewpoint of the company that they believe they are not a good owner of that particular company, and also they are not the best owner to stimulate the growth of this particular business. I think Japanese companies started thinking many different kind of ways, and that's good for the entire economy.
In addition to focus, Nagayasu says a firm like Apollo can also bring its particular expertise in working closely with management.
So the way of the style Apollo is asking us is discipline. I take it in a very positive way with fewer Panasonic Group constraints. So I don't want to say the freedom, but we really can focus on what we need to do.
What sorts of profit goals or targets do you have for Panasonic Automotive?
We are not disclosing much of numbers, however. Our most important KPI right now is E minus C, EBITDA minus CapEx. We are aiming to triple this E minus C number in 27 compared to 2024. And so far, since partnership started with Apollo, partnership has been started, and the number is showing in a positive way. And also looking ahead, the midterm, a short-term midterm goal, we are quite advanced in this situation right now.
Carve-outs may help bring more discipline to companies like Panasonic Automotive. But there are other transformations in Japanese business that require injection of patient capital into existing companies. Transformations like the one ongoing at Sony under CEO Hiroki Totoki, moving from manufacturing the electronics on which the world consumes entertainment to producing the entertainment itself.
Sony had already got a great reputation in the area of consumer electronics, but at the same time, digitalization has happened, and things move from the analog to digital in terms of the technology. And in digital era, generally, it's particularly different from difficult to differentiate the products from the others in the area of the consumer electronics. And then it's really difficult to compete with the other players. And that environment invite new entrants to the industry, first from Korea and followed by China. And particularly China, as you understand, they have enormous domestic market. Backed by that market, they try to export their products. The consumer electronics area now need a massive scale, and competition field comes to volume and price. And unfortunately, it's very hard to maintain that volume in a Sony group.
How does the Sony transformation fit together with the broader transformation? Does it affect how you're transforming Sony, that the entire industry is changing?
We forced to change because, when I came back from a subsidiary to headquarters, and that was 2013, that was a very severe time, and the financial performance is very bad, and many good people were left company.
It's been a big change for Sony to branch out from its traditional position in consumer electronics, but it's already well into that transition. Around a decade ago, entertainment made up only 30% of its revenue. By 2024, it had grown to 60% of the company.
Let's talk about the creative side. As I understand it, it's more than half of the business for Sony at this point. What are the component parts of that you rely on?
That's including game and the music and motion pictures. And these entertainment business earn more than 60% of revenue now.
And of those three, which is the largest one? Is it gaming?
Gaming, yeah.
Gaming. So Tell me about the gaming business.
We are always talking about PlayStation should be a best place to play from users' perspective, and at the same time, best place to publish, because we have a great relationship with a bunch of third-party, game publishers, and of course we have great studios as a first party.
Sony's major games include international blockbusters like God of War, Ghost of Tsushima, and Helldivers. But as successful as they've been, Totoki-san prefers to supervise rather than be a gamer himself.
I'm good at, the thinking about a business model and including a financial, and also the, think about the top-down approach. Which industry is suitable, which we have in Sony, which field we can capable to compete with the other companies. That kind of, the way of thinking is very helpful to develop my career.
Do you personally consume Sony creative product, whether it's games or films or music?
I love music and TV dramas and music, but I cannot play game, to be very honest. I can play, but it's a very, the primitive level.
And Sony is a major producer of the music and film that Totoki-san loves.
We are doing good business in film, and of course, some films are volatile, but they try to avoid such volatility, and we develop the portfolio to make a film, and sometimes we do a deal with a big distributor such as Netflix.
Anime is something many of us identify with Japan.
Yeah.
As almost uniquely Japan. Has it gone global?
Yes, now definitely. Thanks to the big streaming platform, now anime is simultaneously distributed, at the same time, worldwide basis. That helps, the anime global hits us as a lot, and that enable to mitigate the piracy risk as well.
As part of its push toward content, Sony has made major investments in music catalogs building on its traditional strength. And that's where Apollo came in.
It's quite important because, each capital resources have a different risk appetite as well as a different time horizon. And as we diversify our business, and we need to acquire many asset classes, and it's, we can find out the best fit of the capital investment and asset class.
Is that why you entered a relationship with Apollo for music catalog, because you needed a long-term time horizon?
Exactly. And the music capital is relatively low risk and low return, the asset class. And that really fit to the, private credit. And, needs a long time horizon as a capital. And as such, that's a great example.
It turns out that Totoki-san has a long time horizon in his music tastes as well. His favorite artist is a British rock band from the 90s, one that's recently gotten back together, and one that over the years has worked with Sony in distributing some of their records.
Do you have a favorite artist?
I actually joined the concert of the Oasis and in Tokyo. And they have a dome concert 2 days, and I really enjoyed. And it's after 20 years, they had a concert in Japan, and a lot of fans are there. And of course, I heard all days music as well, and it's really great fun.
From automotive to anime, Japanese corporate leaders are changing the way they do business and finding new ways to capitalize those changes with the help of firms like Apollo.